Are we really going to see millions of new homes being built to meet the housing demand? Unfortunately, the data tells us a different story. Let's dive into why housing construction is stuck at recession levels and what this means for buyers, sellers, and the market as a whole. Despite political promises and public demand for more housing, the data shows a grim picture. In October of 2024, housing starts were down 4% from the previous year, and building permits dropped 7.7%. These numbers reflect levels seen during economic recessions, not during a booming market. Builders are hesitant to commit to new projects. Why, you might ask? Because of high mortgage rates between 6.75 and 7.5%, making it harder for buyers to afford homes, reducing demand for new construction. Even multi-unit homes, those permits are at recession levels, showing no sign of recovery. Typically, high demand leads to increased construction, but housing market is in an exception. The existing home sales remain at historic lows for the third year in a row, adjusted for workforce size. Builders are strategically managing risk, and they're offering a temporary rate buy down to attract buyers, but these incentives don't create long-term confidence in the market. Low housing supply paired with steady demand creates significant imbalance in the market, and here's how it plays out. With fewer new homes being built, the limited inventory of homes for sale keeps prices elevated. In many markets, this means buyers are paying top dollar even as affordability wanes. High prices combined with fewer comparable sales could lead to challenges in appraisals, especially in areas where prices are climbing faster than expected. If an appraisal comes in lower than the agreed upon purchase price, buyers are then faced with a tough choice of renegotiating that purchase price or covering the difference themselves. High mortgage rates significantly reduce what a buyer can afford. A 1% increase in rates can lower purchasing power by 10% or more, forcing many buyers to opt out for smaller homes or really delay their purchases altogether. With fewer new homes being built, renters may feel the crunch too. A lack of affordability in rental units pushes up demand, leading to higher rents and making it even harder for tenants to save for a down payment. Now, mortgage rates are really the key and the main bottleneck. When rates briefly dropped to 6%, builder confidence improved and sales picked up. But rates have since climbed back up all the way into the sevens, stalling progress. If we could maintain mortgage rates at 6% or lower, we might see meaningful boost in the housing starts. Unfortunately, currently the Federal Reserve policies make it really unlikely for that in the short term. So in the end, what's the solution? The most immediate fix is lowering the mortgage rates and keeping them stable over time. This would boost builder confidence and make homes more affordable for buyers. Policymakers might also explore incentives for builders to develop more affordable housing or streamline zoning and permitting processes to reduce costs. But these are long-term solutions and won't solve the current construction slump overnight. The imbalance between supply and demand isn't just a challenge for builders, it impacts home values, affordability, and even renters. Until mortgage rates drop and demand stabilizes, we're not likely to see the millions of new homes the market desperately needs. Now, what do you think? Can we turn this around, or are we really just going to be stuck in a housing stalemate? Share your thoughts in the comments and don't forget to subscribe for more insights on the housing market.